Hello and welcome everyone to my new video for the week. For the trading week, April 29th, May 3rd, 2024. And the title of the video is Trading FOMC Week. This is Galaxydoc Market. This is our second video. Thank you everyone for joining. This is Galaxydoc himself, or Brandon, as you may have known me from other channels. And we want to present this very important video for you all so that you can improve your trading and have a perspective on what we're thinking as a group. Now, here's the disclaimer. Pause it and read it. If you agree, please move forward. All right, so as we discussed in last week's video, we prepared for a relief rally, and boy, we got a rip your face off rally. It may still have some legs. We will find out after this video what we're thinking and what you can do to benefit either way. Just remember that this is a relief rally in the middle right now of a corrective sell-off. Now, we understand that the markets do not go down in a straight line, and it does not go up in a straight line, and we have to have an unbiased perspective so that we do not get emotional and fall into the trap of FOMO or FUD. Now, let's talk about some videos. In this video, the news that are coming out, not videos, geez. So bank failures are beginning again. And I've been talking to our group members and people that would listen. The chatter around the market, especially around the actions of trading actions of big banks, as well as just around the stock market in general, there is a sense of unease and some rumors, obviously, that's been going around that there was a bank failure right around the corner. We really didn't see a lot of it on Thursday. Friday, there were some indications that something might be wrong. If you haven't noticed, that the market was pretty much stalling, and we just didn't know what that cause was. So we need to understand why that might be and why this might be a big deal going forward. So regardless, this is one of the first headlines that came out. Of course, when it says 3:45 p.m., that is way after the market closed. This is on Pacific time. So, way after the market closed. And that's what they do on Fridays, right? There were signs and symptoms, and we'll go over that in our technical analysis and when we look at the broader markets. But it says bank failures begin again, and Philly's Republic first seized by FDIC. Now, here's the crazy thing about this, and you can go to Zero Hedge and read about this, but half of its deposits were uninsured at the end of 2023. So this is, yeah, it may not seem like a lot, but you need to understand if half of your deposits are uninsured at the end of 2023, what really is the state of these banks, especially in light of, I've been harping on those TNX, the 10-year treasury yield rising, basically makes these banks more and more insolvent. That's a topic for another day, but this has to be, you have to pay attention to this. The second thing is, the U.S. bank deposits suffer biggest weekly decline since 9/11 as taxman cometh. So what does that mean? Biggest weekly decline. And so again, this article is available, and I think you guys should all check into this over at the Zero Hedge. And this line right here is basically the weekly deposit outflows, and then you can see some of the other times, and you can correlate those dates with what the stock market did. And this is an early warning sign, and I've been telling you for months. And sometimes I see these divergences as well as writing on the wall, so to speak, that something is going to happen. And like I said, I do not believe this corrective phase and the crash can't happen without the participation of the financials, especially these banks. And these banks have been propped up by the central banks, Federal Reserve, European Union, whatever the case is. As if you're scratching your head and watching things like Deutsche Bank, JP Morgan Chase, they're just basically toxic assets that are out there. That basically continues to go higher. That's because it is a facade. But you can't fight the physics much longer. U.S. bank deposits suffer biggest 1 week decline since 9/11. Okay. And they're trying to say, well, maybe it's because of the tax man and people are paying, you know, withdrawing money to pay taxes. You know, the issue is I think the tax revenue for the governments are coming down so much and that they're printing money so much to the fact that inflation is coming higher that they're, you know, proposing crazy stuff like raising your long-term capital gains to 44%. I mean, who's going to invest at that point? That would literally kill the economic activity. But pay attention to the bank deposits, guys. There's flight to safety. And I don't think these are coming from average Joes like us in the regular market. Now, the other thing is, I said, hey, look, Israel and Iran war rhetoric is largely over for now. I mean, it's not gone, but what you have to understand is that you have to read what they're actually doing instead of what the media is telling you that largely that there isn't a conflict. Really, the Ukrainian war with Russia has been swept under the rug. But they keep talking about this Blinken threatening China over Russia ties. You know, I mean, who's really in the downward spiral? Again, another topic for another time in relation with the U.S. Does the rest of the world really value our relationship anymore with these worthless money that we keep printing and exporting to the rest of the world? This is why the BRICS countries exist, right? So, you know, arrogantly, we believe that the Russia would struggle to sustain its assault on Ukraine. I mean, what is actually going on there? Again, another topic for another time. You know, one of the sides is not telling the truth. And why does Ukraine continuously need more and more and more aid? I mean, we're broke as a country, and they authorized what, 56 or another 600 billion? Yeah, $600 billion worth of aid. What is actually being used over there? Those are questions that inquiring minds should ask, right? So then, here is an interesting one. Here is the axis of evil, right? I mean, these octogenarians, I don't know if Powell is an octogenarian, but this one definitely is. I mean, talk about the three stooges at the same time, but at the same time, without getting political, I mean, I have no allegiance to either parties. I think they're both corrupt. But at the same time, um, you know, Nomura tends to be right when they speak, not right away, but they tend to be earlier, but they tend to be the warning sign for the markets, right? And they're saying, watch for macro catalysts. So here's what should scare the bejesus out of everybody. The Federal Reserve Bank is not a government agency. It's a private bank, folks. And they're talking about aligning the Treasury with Fed, giving them complete control over how they collect money from you and what they do. So really think about what is going on here. And governments will do heinous things to its citizens when they're broke. And guys, we're broke. We can't pay back these debts. So that should lead to additional problems, you know, more dominoes that's going to fall in the next few months. Like I said, this crash is not going to occur in a span of a couple of weeks or a month. This is a multi-year crash, I believe, extending through 2025. And then, of course, you know, you've heard about this. Chinese nationals are being charged with conspiracy to export U.S. technology. So there's definitely theft going on. It is a rhetoric that is being built to program you to hate Chinese. I don't think China has been ever fair. I mean, why is this even a surprise? And why do you keep doing business with them? And then, of course, the commercial real estate market, and this is a small snippet, and I told you that the exposure to this commercial real estate market and also exposure to China's Evergrande, no one seems to be talking about that, but the exposure to Evergrande will bring this financial sector down, just not right now because they are being propped up and everything is a facade. You just need to know what they're saying versus what they're actually doing. Okay. So they're saying, hey, it's an apocalypse in San Francisco. Well, what do you think having, meth addicts and all these people on the streets and basically just turning a once beautiful city into a third world country like state where people can go in and steal things and there's no recourse, the police is overwhelmed. What do you think's going to happen? Okay. But I think this is all done by design. Okay. So this is the other thing. Um, This is where the flashpoint back in April 19th, when I started telling you that, hey, we may be looking for a, not only technically, but narrative is set in so that they will rip your face off. Remember those futures reverse all losses, okay? After Iran downplays Israeli attack. I mean, you know, this isn't over, but this is over for now in the media. And that was the signal for the markets to go reverse. Oops. Okay. So let's talk about where we are in terms of market sentiment. So this is the Fear and Greed Index. To the left is the April 19th right here, 2024. And then to the right is where we ended on Friday. All right. So we're still in the fear category, but there's a little bit of hope coming in. I think on Monday we'll probably sneak into this neutral area, further sucking in the retail longs. Remember, retail traders are the bag holders. We are the exit liquidity. We are the emotional traders that the institutions take advantage of. Okay? And this is the art. And this is the skill that you need to master because our brains are not wired naturally to be able to trade because of the shenanigans and the conspiring of all of these institutional banks and investment banks and hedge funds that collude every day to make sure that they take money from you. Okay, so this is very important for you to know that fear. Okay, gauging this fear is very, very contrarian. It is designed to see what our colleagues, the non-professional traders that are trying to beat the system, you have to understand this, right? So what does it matter at this point? I mean, April 19th, there was maximum fear. We never got to the extreme fear, so we know that the bottom isn't in yet, okay? No matter how short the sell-off is, we will hit this extreme fear level. But because of the rally that ensued, the dead cat bounce rally, I hope everybody took advantage of it because that was obvious technically and based on our rampage method that we use. The fear, okay, is now at 42, threatening to get into this neutral area. Okay, we'll see. Okay, we trade what the market gives us, not what we think. Okay, the number one trade in trading, okay, is basically that you trade the market you see, not what you think, what you see. Okay, all right. Okay, so trade what you see. Okay, that means patience is important. We get paid to wait as traders and investors, actually. I said last week's video, the sell-off will be sharp, but it will not be without sharp intraday to multi-day. I'm talking about this could extend, a week or two rallies. Some will be rip your face off types. This was my warning last week's video. And so tying into that, somebody asked me, well, since we bounced here, is this really in play? And I think that's a fair and legitimate assessment. So I went and re-looked at it. And of course, this is just an analog that we're looking at to help us guide what the behavior of the institutions are and what the behavior of the market in general is. So if we're in this leg, we may be right into here, and then this little bounce right here may be coming into that area right here, right now. So we're basically forming that candle, and we'll see when the Monday and Tuesday markets come in that we get these sharp, impulsive sell-offs that we really didn't get. It's been very orderly, just like right here. Okay, so we may be still off a little bit on the time frame, but remember, this time frame that I'm talking about doesn't have to be exact, but it needs to rhyme, and we're still within that area. Okay, So we have, as of 426, as stated right here, 2024 rally is underway. Okay. Now the question is, what are the signs and symptoms right now that it's exhibiting? Are we going higher, or are we chopping sideways, or are we going lower? Well, wait until the end of this video. Please do not fast forward. Learn. Okay. So our directional indicators were spot on. So be on the lookout for intraday to multi-day attempted rallies, right? So again, this is another slide from last week. Now the question is, did anyone benefit from this? Okay, so here is what we have right now as we speak. Okay, so we had a little bounce, right? On Thursday and coming in, and then the rip your face off rally started Monday, pretty much extended all the way through Friday. However, we got a little blip, and on Friday we started getting this downturn again. Okay, we are coming into this on the RSI. We're firmly below this downtrending line, obviously. Now we have entered into this next range of possible targets where we believe that it's going to hit these targets down to here. So there's a lot more movement down, but it doesn't mean it can't chop here and then whip the market around. Okay, and there's some catalysts that I want to talk to you about this week that's going to be significant. But regardless, we have the MACD histogram showing a little bit of a divergence. Of course it is, because we've been rallying since Monday through Friday last week. The question is, how much will this become? So we need to pay attention to this MACD. But this is our McClellan Summation Index, okay? And this is something that basically has, from time immemorial, has given us an ability to find the directional change and the directionality of the markets. Okay, let's look at where the put to call ratio is. So as alluded to on the last video, and if you haven't watched that, I still think that it's instructive to watch it so that you know the process that we go through in terms of looking for market tops and bottoms and intraday swings, and this market is very, very unstable, volatile, and bulls and bears both get hurt. So you have to understand what this meant. That we knew on the spike it wasn't ready to start going to the moon, and I don't think it's ready for that yet. So I said, hey, look, watch for this to pull back, and now we're looking for this area, this zone of support to come in. Right now, MACD is completely directional to the downside. You could see that signal coming down, but you see how these sharp spikes, so it's going to do this and then spike back higher. We just got to be watching it. And I wouldn't bet the farm right now on Monday and going in and buying puts just yet. Okay, I just don't think this rally itself, it needs more time to play itself out, and I'll show you why. Now let's look at the sectors. And one of the things that you really need to understand is that this 20 period moving average denoted by the blue line and the red is the 50, there is a death cross. But not only that, right now we're stalling out. Now, could we on Monday gap higher and then start taking out this 515 to 520 level, which I thought this rip your face off rally would take us to? Back again there. Just so that the narrative changes from, oh, I told you, that's just a little pullback, you need to buy the PTFD, right? I don't think that's the case. However, we gotta respect what we see and let it confirm. Okay, this is stalling. We hit this level and we stalled back down. So keep that in mind for this SPY. And now the discretionaries are super important. Okay, we did actually poke through the 50-day moving average, and we still don't have the 20. 20 is kind of like the magnet where it likes to gravitate towards. So the discretionaries, again, looks like it's stalling, but it has a little bit of an upside move left, and we'll find that out. We don't need to basically jump into a trade and guess. We need to basically time this correctly. Okay, the communications, again, failing off the 20. Okay, 50 is overhead. It's ready to make that death cross. This has already made the death cross here. Technology, again, there's a little space between this. So the technology, again, is very, very important. And I think there's a little bit of a space left. So it gives you a little bit of a pause Why did they stop it there? It's to make you guys guess. My guess is that Monday we may extend and try to test these areas. Honestly, this rip your face off rally did happen. It was pretty powerful. It was very profitable to trade, especially if you knew it was coming, right? Most people thought we were going to break through the gates of hell, and we'll talk about the gates of hell. But the main issue is that it has not hit our target, 515 to, that this area, 515 to approaching to the 520 area. We have stalled out at 510, but this was still, and, we had a little fake out and an extension higher, but now there's a gap right here also. So technology is going to be very, very important, especially in light of the fact that we have a lot of tech companies reporting earnings and we are in the earnings season. Industrials, again, we're above the 50-day moving average, but now the 20 is beginning to curl over. Again, finding some resistance here. Building materials, they're in a kind of a rally state, but again, we are stalling off of the 50-day moving average, stalling off of the 20. It's either 50 or 20. These are all stalling signs that we're seeing. Now, can it go much higher? Yeah, I mean, anything's possible. And that's what we're looking for. It really did not hit, again, on the SPY, didn't hit our levels. And it's either a sign of weakness or they're going to really screw it to you on Monday and Tuesday, right before FOMC. And we need to talk about that also. Utilities are finally showing some signs of weakness. I mean, I thought utilities were supposed to be, I don't know, strong during market downturns. And it may make sense in the light of the fact that, we had a dead cat bounce. And so there's maybe money coming out and trying to rotate back into tech. But there really isn't a lot of strength into this. Look at these volume. Volume is very lackluster. Financials, okay? Financials are being propped up, folks. The banks are being propped up. And watch that articles, snippets that we talked about. Deposit outflows and then more rumors of bank failures. And we actually got one after the market closes. Gee, I wonder why they chose over the weekend to announce that. But I think there's more cockroaches out there. But regardless, financials are basically ready to form this death cross with a 20 over the 50, and it looks like it's stalling. But again, I would not discount this thing where they could continue to push this thing higher. So we'll talk about the keys to that. And then real estate is super weak. Okay, it hasn't even gotten into up here. And then we got some sort of a doji formation with a tail candle. So that's something that we need to look at. Okay. So let's go ahead and review the heat map here, just real briefly. Okay, I don't normally do this a lot, but I think it's important right now. So here's the heat map of the Nasdaq 100, and can you see what's wrong with this picture? Well, without wasting time, I'm just gonna tell you right now. All right. So basically, it was opportunistic buying of all the beaten down stocks, okay, with Google and Microsoft reporting stellar earnings, okay? And we'll talk about these when we do our technical analysis, especially Microsoft and Google, all right? But you see something different? The previous leaders, Tesla, Netflix and Apple, was basically counteracting any of these good news. Remember, Amazon reports earnings this week, okay, this week that we're talking about, and Apple also, okay? And so we need to understand on the NASDAQ 100, we got ASML, Costco, all of these guys that you're looking at are basically, for the day, was green, okay? But the major big players were non-participants, okay? Other than the ones that reported earnings, other than the ones, remember, NVIDIA took it up the chin. This is an expected bounce, okay? This is kind of the chart pattern that we look at. So right there, look at Amazon, okay? So Amazon's got a lot of meat on its bone, and they be in, blowing past earnings estimate and having a positive review. But, I think it's due. It's due for a pullback. Look at Google's gone parabolic. Microsoft has not. Microsoft has literally pulled back a little bit. And Apple is trying to find a bottom. Okay. Be careful shorting Apple ahead of the earnings. That's all I'm going to say. And then Tesla at the bottom end of the channel. 200,000 or vehicles being recalled because they keep, 2 million vehicles being recalled by NTHSA because they keep lying about the safety of the autopilot. Okay. You know, trusting Elon Musk is like trusting a freaking crack dealer. Okay. So just remember that. Okay, so let's go ahead and review the technicals. You know, my videos have been increasingly long, but I think if you have the time to look through everything, I think it would benefit you. And a lot of people have reached out to me and they like the format. Let me know in the comments below also. Okay, just comment below saying that, Brandon, you talk too much, or I need to break up these videos. Okay, please comment. Okay, let me know. Give me some feedback and then I'll do it. Okay. There's going to be a lot of videos coming out this week because of earnings. I want to do one on Amazon definitely. And, a couple of other videos on earnings focused things. And then I'll start doing some more shorts on, investors, trader psychology, which I'm big at. And this is what we consult on and things of that nature. Okay. Okay. So review of technicals. Where the heck are we? Okay. So let's go over the macroeconomic fundamentals first. This is the 10-year treasury yield. And I've told you that basically this 10-year treasury yield, um, it looks, like that it's either top either or it's going to need a little pullback. Either it's going to pull back or it's going to move sideways to build energy to go higher. I just think that the Fed has lost control of the inflation front. Okay. And this is why they've been parading out all the mouthpieces of the day, Kashkari and all these people that basically was saying, for the most part, this market has factored in at least 3 to 5 rate cuts in 2024. And pretty much they're trying to ease the market into not panicking by saying, oh, everything looks fine. We got this under control, but I don't know if we need to cut rates this year. Okay, guys, here's what's going to happen. Okay, when the rates start going out of control, because remember, we printed all this money and exported to the rest of the world. That money is coming back to us and causing inflation here. Also, when they panic like that, they're going to have to raise rates sometime. Okay, and that's going to be a huge destruction of demand and consumer output, which is very, very important. I don't know if you saw the GDP, and I didn't include it in this video because it's not pertinent, but the GDP is flashing deep, deep recession, maybe even depression levels. Okay, and yet the market rallies because that's what it does. Technically, it was overstretched. There were just too many shorts getting exuberant, and then the bulls getting very, very morose. Okay, but let's look at this TNX 10-year Treasury yield. I told you that this box right here is kind of our ultimate target. I mean, we're at 46.69. Even this little pullback finds support right near that ADMA. Okay, all right. So maybe we pull back, chop around here, and then start moving higher. If this thing starts to move higher, watch for the instability in the markets. The Fed's going to have to try to do something because now the cat's out of the bag and the banks are beginning to fail again. Okay. That Philly bank that we talked about. Okay. That's not something to just ignore and say, well, that's a small bank. This is inclusive of all the banks, including the big ones like JP Morgan Chase and the rest of them. Okay. Why do you think that at most seminal moments that there's these events like the Israel-Iran war to scare you? Look here, look here, don't look over there type of situation. It's to distract you. Okay, they think we're gullible, but we're not. We can see these charts and then understand that something is happening. Now, I do believe this MACD is beginning to form a little bit of a death cross, but right now, the MACD histogram is stable. I mean, it's definitely lower. The question is, are we going lower or are we just chopping here and then work itself out? Now, the CCI really hasn't broken to the upside, but it really is, below. So we know that it was coming down. This is why we talked about it. But realistically, if you look at the whole situation of this chart, let's go look at the PPO ADX. Okay. The PPO ADX, remember, when it pinches like this, it's showing you imminently. If you don't believe me, let's take a look. That there's a rally coming right here, right? Well, PPO ADX right now is forming this bearish formation. And so what that means is that, is there an intervention? If the TNX of the Fed can successfully engineer some form of a rate rescue, then yeah, TNX is going to drop. I think it's going to come right back down to the 46. But here's the thing. Fed needs to get this down to 42.5, okay? And even if they get it to 45, I mean, what really did they do? They did nothing. It's not, the markets are going to just shrug that off. But watch the TNX intraday. You can see when the reversals come based on this TNX. And if you want to learn more about that, um, you know, consult with me, join our group, follow this channel. Okay, you'll learn something. Okay, so let's move on to the next one, which is the U.S. dollar. Now, the US dollar is an interesting situation, right? Dollar strength is negative for the market, and that correlation has existed since after Thanksgiving, okay? And the strength in dollar really is denoting that it looks like it's not going to stop. We formed like a bull flag right here, right? And we need to basically get out of this congestion zone. We look like we're going to turn over on the MACD, and it very well may. I mean, we can still have a deeper pullback to this 20 SMA, even a pullback down to this the trend line, the first structural trend line that we have. Um, does not negate the fact that the dollar is going higher. And the question is, why is the dollar going higher? I may do a video on that next on the video. It's just too long. I mean, I've already been speaking for 30 minutes here. Haven't gotten to everything that I need to, but this is going to be long, but it's going to be very, very beneficial for everyone. So the dollar basically has been showing some signs of bullishness here and here. And if you look, I mean, you see it right at that demarcation line, we rally higher. Now we're beginning to show a little bit of negative PPO ADX relationship. And so I think, we're going to get a little bit of pullback ahead of the FOMC. What happens after that? That's the key, folks. That's what we need to be looking for. All right, so let's look at gold because gold has been telling us something big was coming in. It led to that Israel-Iran thing, but I think it's more than that. I think it's related to the banks. I think it's related to the Fed. I think it's a financial catastrophe and what they're going to do next to kind of cover this up and see if we forget. Okay, but the gold, obviously, I've been warning that we topped last week, that we may see a pullback, and and this is a critical area. I'm not going to lie, 2307 needs to hold, and then if that doesn't hold, 2273, 63 must hold. Okay, I think this is a pullback. I mean, this thing was parabolic. This is that parabolic impulsive trend line. We broke through there. Now we need to break above and start moving higher. Here's the overhead resistance at 2427.47. Okay, remember those. Yeah, you have to remember those numbers, right? Obviously. So MACD is still in the positive territory, but the little pullback. MACD histogram is basically flattening out at this point. Okay, so this pullback may be over. I mean, but I'm not ready to call it to go bullish on gold just yet. We already made a ton of money off of that, either in the futures market, in the GLD, or in the futures options. But you look at again, the PPO ADX is saying, already told you that it was basically going to form this bearish thing. So I think it probably has a little more legs to come back down. Okay, especially if they're going to try to rescue the markets further. Remember, we are in this rip your face off rally moment, and I think it has a little more legs, maybe, and we'll call it on a day-to-day basis. I will definitely do a shorter video when the market's ready to turn, but I think we're getting set. I mean, we've already had that issue, right? Let's look at our very, very friendly VIX. So I told you at this area, this shot up here was the time to short. Okay, it went parabolic. We basically broke through this parabolic trend line. Now we're down to here. We're right at the 200 SMA, just below there, and we found support at 15.03. MACD looks like it's continuing to go lower. I think we really need to get down into this area. So I think there's a chance through ahead of the FOMC that the markets can continue to rally. I think the target may be 1402 by about 13.5, and that's what I think is basically setting up for, right? Don't get too overly bearish and start front running these put positions. I mean, if you can buy puts, you got to be very opportunistic about it. Okay. Now, so we've gone through that. So let's look at our SPY. Okay, so this is basically our SPY formation, and these are zones that we're talking about. Okay, and so and these zones, it's no lie. I mean, basically, this is where basically I was calling for a relief bounce. It really hasn't gotten above, the 510. I thought for sure that we would be able to take out this 515 to maybe even get near that 520. What a great place for that would be for the short. So I think patience will pay. Okay. I think realistically, the MACD histogram, we have a little bit of a MACD death hook happening. That could change any minute. But, that's basically saying, hey, this relief rally may not be over just yet. We just got to be very, very careful about this. But at these levels right up here, it's going to give us some very, very fantastic opportunities. To come in. So, and of course, when we look at the CCI, I mean, this is kind of a little bit of an inverse head and shoulders, right? That it's forming. So yeah, I think it's going to go higher. It didn't do it on Friday. It screwed us a little bit on Friday in terms of our um, some of our intraday trades. Again, pause this video, and it takes a lot of work to find these zones. And you can see these zones have been developed over the last 3 or 4 weeks. And I use a proprietary blend of obviously pivots, right? You got to know your levels, and basically looking at time and sales and the whole 9 yards. And then we talk about that in our group and as a group membership. We talk about that in our courses, and there's a lot more courses coming in. And this concept of following the order flow, which is basically revolutionizing a lot of people's trading. And it's super important to find these levels and then understand where the markets are going to go. You don't have to guess. You just have to be, a little bit right on the timing. But that takes trial and error. You can't win all the time. Those people that tell you that they have 100% winning strategies, they're freaking lying to you, folks. But if you win and you win big on your trades, that's the key, right? The key of a trader is to be able to take losses gracefully, right? And basically come back to fight another day. But these are the levels that we're looking at. I still am surprised that we have not broken through this 510 level, and we're really getting that resistance off of the 20 SMA. But the MACD right here is telling us something. We got the inverse head and shoulders on the CCI, which is my favorite directional indicator and a contrarian indicator. We have basically a stochastic, however, is looking like it wants to close the gap. We'll see. Let's see if it gets above the 50. So this week, look at your stochastics on the daily for a sign for a turn in the markets. Now, what is our PPO-ADX telling us? Well, PPO-ADX has been telling us that the bounce was coming, wasn't it? Okay. These are bearish formations. I mean, this we could have taken to the bank all day long. Okay, folks, you got to learn this PPO-ADX. I don't know how much more I could like pound the table on this. So on that level, I mean, we went higher, we had a little pullback and then continue to move higher. But now we've got this bullish, what I call PPO-ADX crush indicator is signaling this. So we should go higher. Okay, that doesn't mean that we haven't. We have moved since that signal came on. The question is, what will happen after the FOMC? So stay tuned for that. Now, the other thing that I like to look at is the accumulation and distribution. It really has not been able to break above this level. We're at the peak. We're still kind of overbought, and we're just basically pulling back. Still having problems getting above this level. And then we've got the this average true range, which I like to use as a barometer. We're at the near the top end, okay, which means that a pullback is coming. This is nothing more than a dead cat bounce. The question is when. Okay, so let's look at SPY on a weekly basis, and the weekly on the bullish daily, it's bullish, right? On the weekly, it looks like a very toppy candle. We had an inside day. We have the RSI that looks negative. We just had a recent crossover for MACD. Once it crosses over like this, I mean, does it really come right back up? I mean, we had some instances where we did that, right? We crossed over and came right back in, but that's still like a period of like 3 or 4 weeks. And so once the weekly starts to move, it continues to go again. Here's the zone of support. that we said we need to get over, and we found a little support and then failed right at that green line, which is 80 MA. Write that number down, folks. It works like magic. If you want to learn more about that, we have courses. Join our group. Consult with me. I'm here to help you basically become a better trader. Okay. And trading without emotions is the most important thing in this life, right? We have the CCI now, it's fully directional. So I anticipate that we'll break this and start making a move down into this 470 level. I know you're saying, huh, that sounds impossible. Um, Believe it, folks. We'll get there. Okay. Shorter than you think. But the CCI, the PPOADX on the daily, on the weekly is bearish, folks. So longer term, that's why I think this is a dead cat bounce and that we have a lot more legs going. Okay. So that's for SPY. I don't normally talk about QQQ, but I am compelled to do so. This is our daily. And if you look at this daily chart, we have basically a continuous extension down into divergence as we move higher off of this level, right? Again, we're failing on the zone. I was hoping that we could extend into this trend line right up here, right? But it just hasn't come, and I wish we get a sharp bounce like that that we can short into. As we always say, fast in, fast out, that type of situation, and that's basically what I'm looking for. Because after that, look at all the downside. Look at all these beautiful zones that it's going to go to, what call, unfinished business. Okay. However, on the daily, just like SPY, we got a MACD a bullish hook forming, and the MACD histogram is positive. Again, we're forming some form of same thing, like a CCI reverse head and shoulders formation. So I'm just hoping that it gets higher. Patience is required. We can't be jumping in and out. If you do, it's going to be an intraday type, but that's a whole different mechanics of how we trade. This is for people that want to take advantage of the tops and bottoms and short. Okay, but if you want to scalp, and if you want to do intraday trades using futures and futures options, we do that too. Okay, but this is for you to know what the direction is. Again, my PPO ADX is crushing right here, right? It needs to cross over, and then it needs to just expand out and for that next leg. So patience is definitely warranted here on the QQQ also. Here's the thing though. We really haven't really broken out above. We definitely broke out of this channel, but we really haven't broken above. Okay, because we're at the top end of the range on the ATR. The other thing is I think I said accumulation distribution, but accumulation distribution is negative. It is getting more positive, but really, if you look at from where this is coming from, we're right on that cusp. It may go a little bit higher, maybe on this daily, but again, the pause is going to come from QQQ on the weekly. On the weekly, again, we have this situation where, look, RSI is divergent. We came down, same inside day, finding support near this zone of support, but can't break above here. We got to really break above this downtrending line for us to start moving lower. Okay, MACD is negative, histogram is increasing. So that's why I believe this rally is going to be short-lived, but it's just not very conclusive right now. So we just got this. Look at this PPO ADX on the weekly. It does not lie. We are ready to continue to get bearish, and then this is going to be a multi-week where we're going to have fits and starts of selling. Okay, that's happening in the market. Okay, let's quickly go over our NVIDIA. Okay, NVIDIA had its bounce. Okay, after that horrific Friday bounce, and then I said, we're going to have a rip your face off rally. We're beginning to break down from the channel. We're going to go higher. I think we're really going to be targeting right into this 890 to 930 area. Those are the areas that you need to look for stall and a short. The MACD is making a bullish cross. Okay, so a way in, just and let's see if we get the CCI extension into the positive area and then let it roll over. So this is going to be a multi-day. I think Monday and Tuesday, is a great day to let things happen. And, and if it's bullish, I'll hop on the ride for it. Okay. But here is the PPOADX again, negative. We got the accumulation distribution. Okay. It just popped a little bit above, but is it going to come right back in, right to this area? That is the question, right? That's the age-old question that we need to be asking. And so, um, on the ATR, we're definitely at the top end of the range, so I can't go much higher at this point on the Nvidia. Now let's look at our trusty friend Tesla. Okay, Tesla has been a gold mine. Okay, for of riches. We still have this descending triangle. We still have this longer term divergence in the RSI. Now they have the 2 million what recall. Elon Musk, I don't know if you've known him for over the years, he breaks all kinds of rules and gets away with it, right? And he lies, folks. And so basically what we got is MACD crossing over from a very negative area. I think we just pop a little bit and come down. The question is that this continuous failure at these downtrending levels, okay, on this descending triangle needs to be paid attention to. Patience pays. Because if it fails, we got all this gap here after its earnings. Earnings were horrific. It's just that Elon came out and said, "Oh yeah, we're gonna do the low cost. Oh yeah, low cost cars, low cost cars." Okay, how many times have you been sucked into that bullshit and basically gotten your butt handed to you? And Tesla, patience is key. I think that if it's a basically a short all the way at 175 in that region. Okay, and that's what we're looking at now. Let's look at some Amazon action, folks. Amazon has been super bullish, and everyone's like saying, "Well, it found support at the 100-day moving average. That looks like a pretty good reversal candle for me." All right, but the RSI is telling you something different, isn't it? We have a little bit of a bullish divergence on the MACD, and it may just rally ahead of the earnings on Tuesday, right? Tuesday's the big day. I think it got flipped. Used to be Apple and Amazon decided to flip. I have no idea. CCI is bouncing off of the lows, but it's just well off, way off in terms of the having a major counter trend bounce. So let this play out. Let it get up to this trend line. Let's see what happens right here. And I think that this is a totally a game time decision on earnings. But look at the PPOADX, it's negative. Accumulation distribution is stalling out. And then ATR is at the maximum range, maybe even the highest. This is, when you look at the average true range, when it's extended like this, that is a bearish sign, folks. Let's look at Amazon on the weekly really quick. We're almost done here, folks. Thanks for hanging in there. Amazon is showing on the weekly negative divergence. We ran into this major overhead resistance. That is literally the all-time highs area, folks. All right. We found support in this box, and we're right here. I mean, can we see this go to 185? Yeah. I mean, this thing may be just what the doctor ordered. I don't advocate front running earnings, but sometimes you just need to do it. And if it gets up into this area, yeah, okay. The consumers are dead. The cloud marketplace is basically suffering because all the not government, business cutbacks. I think realistically, after earnings, we can target these areas right down here. I know it sounds far-fetched, but we got the MACD rolling over right here. We got the CCI basically divergent and telling you that it's moving lower, right? I mean, what more do you need? What is our PPOADX saying? Oh my God, guys, this is developing, right? You can see that? We're coming in. We got the accumulation distribution just kind of chugging along at the top end of the range. And here's the thing, though. The ATR is at the bottom of the range, and so we can see this expansion up this way post earnings. That just means that things got volatile, okay? So at the top and the bottom end of the range is either bearish or bullish, depending on which direction you think the market's going to move. The other one that's coming out is SMCI, okay? Do not front run this ahead of earnings, okay? Unless you're a gambler and you made so much money last week, you want to throw a couple thousand at it, this is what you do. But we can tag the top end of the area, okay? They may report good earnings and it may pop and may continue to move higher and then stall out at these areas. That's where you short, and it will come down. Everything has a bullish divergence except for the CCI is telling you there's some weakness continuously present there. And then, obviously the stochastic came out from the bottom. It still hasn't broken higher. But here's the thing on SMCI, folks. All right. It's forming that bullish kind of the divergence. So be careful. I think this one might be a pop in a drop situation. Either case, don't front run with options. Probably the IV is going to be like in the 400%. Not going to be worth it. Okay, but it will be worth it after we see what happens after earnings, especially if they pop, it will drop. Okay, here's the SMCI on the weekly. Okay, weekly is telling us totally different scenario, right? Still a bull flag, right? And then we have a descending trend line. We found support at the 20 SMA right here, and then we're coming down. MACD is death cross, and then we coming down. So on the weekly, like everything else, this is why I know that this move in the market is a dead cat bounce. And the weekly tale of two cities, just like QQQ and SPY. This is bearish, folks. Okay, but here's the other thing on the weekly. Look at the accumulation distribution. Okay, this is catastrophic. In fact, the sell-off has gotten more impulsive, and we are now at the top end again on the ATR. Completely different from the daily. All right. Now the other people have been asking about coin. Coin looks like it's forming a head and shoulder, left, head, and right. Right. You can kind of take all of these, and then we have the right side forming right here, or this could be the right side. Regardless, we have declining volume. RSI is divergent. We did have dead cat bounce. And so can this be a pop in a drop situation? Come up right to that neckline and then come right down after earnings. Okay. It certainly looks that way on the daily. Again, daily and weekly on these charts are very, very divergent. Okay. Now we have another positively divergent PPO ADX that's happening. We have accumulation distribution. It's been on a downward trend, but it's beginning to move higher. But we are at the top end of the ATR. So those are kind of a mixed bag, isn't it? Right? Do you really want to front run this? I don't know. I don't think so. But things can change. And but on the weekly, negative RSI, MACD ready to cross over, CCI losing steam, and we're at the top end of the range. And look at all this movement. We broke through that impulsive trend line, and then here's the targets where it can go, okay, after earnings, okay? It is significant. I would pay attention to coin, and if I had to front run something, this probably would be it, okay? But depends on the IV, and it depends on how I feel. But here is the PPO ADX, totally bearish, folks. All right. So let's go back and finish this up. It's almost an hour long. So we have big week of earnings ahead. Pay particular attention, like I said, to Amazon and SMCI, and that will set the tone. Okay. Watch the divergences between daily and weekly. Weekly is telling you there's big moves coming, but we're in the middle of a dead cat bounce, folks. All right. So here are the earnings plays, and the ones that I'm really, really interested in at the market close is F5. Okay. And then obviously the next day, PayPal is going to be significant. Pay attention to McDonald's. Obviously, you don't have to play it. I mean, sometimes they don't move. But Amazon is the big kahuna. Super micro on Tuesday at the close. It's going to be big, big, big day. So the other one is Pinterest. Okay, might move huge. Okay, and then obviously the one that I'm really looking at is MasterCard. Okay, and Estee Lauder, two consumer discretionaries, and then obviously the hotels. Okay, Qualcomm is important. Okay, but may not move very much. Carvana, there's not a lot of meat on the bones, but it's going to tell you the state of the economy. Okay, and then obviously on Thursday, the big kahuna is going to be Apple and Coinbase. Obviously, Cloudflare may move bigly. Okay. BKNG, my favorite, but just the spreads are going to be crazy. And then on the healthcare front, Cigna is the leader, and they are going to tell you what's actually happening. Forget about Moderna, folks. Okay, Moderna may pop based on this rumors about bird flu, so that's something you may want to keep an eye on. Okay. Beyond that, FOMC meeting is at 5/1. 2024 at 2 p.m. So what can we look at? This is the latest Fed funds rate, 5.3, folks. Okay. I mean, if this doesn't ring alarm bells to you, and do you really think that this type of a number at rate currently at, okay, we're at the first percentile, 99th percentile is 5.5. So that's the range that you can look at, okay? And the volume has been never higher at these levels because people are selling bonds, folks, and the Fed's pretty much lost control of this market. The they're going to hold the rate steady, okay? This is where it is, 97.6. This is where we are. That's the Fed funds rate. There's literally less than 2.4% chance that the market's going to come down. But, hope springs eternal, okay? And you got to listen to what the Fed is saying, not what, they're trying to reassure you, okay? Okay. So, expecting, here's the thing, we haven't hit these levels, and it's been quite frustrating. We're either stalling out, but more time is necessary for us to see if we hit these levels. At these levels, it's a short. It's a short, folks. But compelling case can be made for a stalling action, and so we just got to be vigilant, right? Don't go all in. Okay, be patient. I think some fireworks are coming after FOMC. Okay, trade what you see, not what you want, folks. All right, and then I'm finally coming to an end here. We're in the middle of a relief rally. I said it. Okay, rip your face off rally. Okay, but we're also stalling now, so it makes things a little muddy. Patience is key. Okay, I told you last week, not all bears will make money, but bulls and bears get hurt during crashes. Okay, watch for sudden sharp reversals. Those are what we short. Okay, Fed stuck. Okay, all right. If anything, they'll probably need to raise rates, but they're not going to admit to that. Earnings are, I mean, these are the big players this week. Okay, and BKNG right here. Pay attention to the retail and consumer discretionaries. Those are the weak ones. Here's the watch list. Okay, SPY, QQQ, SMH. Okay, and then Apple's and all of these right here, especially these guys right here, reported earnings last week. Okay, we have some short positions on them. Not big, but we're beginning to build it. Beware of bear traps and bull traps. It's going to be wild, folks. Watch for continued bank failures. I talked about this. This is just beginning. We already got one after the market closed. Imagine that. Expecting grind higher, but watch for stalling action. So that's what's happening, right? When you look at the indexes, SPY is on the daily looks bullish. The same thing with NVIDIA. But when you look at the weekly, it's telling you more downside is coming. So patience and short the ribs, okay? So this is my new channel. So folks, please put the word out, like us, share us, and above all, comment, good and bad. Give me suggestions of what you want to see more. And thank you. And let's get some alpha here, all right? Alpha is pure profit, right? Subscribe. Please subscribe. You want to join our community and you want to find out what it's all about. You want to consult with me. You want to find out what that's all about. Here's the email address and schedule a consultation, okay? All right. Let's get some alpha, folks. Okay, don't get sucked in. Don't be exit liquidity. Bye-bye.